Let's turn to property investing now and some key traits for high growth investment. Abdullah Nouh is joining us from Mecca Property Group. Abdullah, good to have you on the show. Thanks for joining us.
Thank you.
Interested to get your view on the RBA non-move, as the case may be, because there was a lot of anticipation. Clearly those with a mortgage were looking forward to paying less on that debt. Is this likely to affect sentiment in the property market, do you think?
I don't think so. I think everyone's pretty confident we're going to see some rate cuts happening towards the back end of the year. I think they were waiting on key measures, the key inflation figures are due to come out on the 30th of July. So we're sort of predicting a rate cut in August, but I don't think it's impacted. I think we're starting to see some markets. I think housing is still an issue across the country, especially around the East Coast.
So you make the point it's important to understand the psychology of the property market if you want to invest in it. What in particular should you be looking for?
Yeah, I think it's just important to understand where the market's at. So, when you're, buying a home in Melbourne at the moment, it's a market that's coming through a recovery. The psychology of this market is vendors tend to have, probably a high expectation as to what their property's worth because they've owned it for the last 8 years. So, so they sort of, calculate 6% per year. But the reality is it hasn't really moved much in the last 8 years. So you're probably sometimes better off buying the actual home at auction because you're probably going to get it for a good price. And we know buyer sentiment at the moment isn't as high as what it could be, what it should be really. So given that, it's probably a good time to get in and buy. We're seeing some really good value at auction as opposed to buying it privately.
So as a property investor, what do you need or where do you need to focus if you're looking for both? I guess you want yield, but you also want that capital growth. How do you identify those areas?
Yeah, that's a really good question. I think, there's a lot of discussion around, buying a negatively geared asset means you're buying a property that's going to grow in value, but that's, what we're seeing over the last sort of 4 years is actually not the case. There is one particular market, Darwin, that seems to be a really, really good performer this year. It is the strongest capital city market in the country and the most affordable from an income to debt ratio and income to rent ratio. But yes, certainly, we're seeing, you can essentially buy an investment, with a 5.5% plus yield, and we're still seeing some good growth numbers. So we've seen over 1% per month since January this year.
Now, you could also buy property through an SMS app. What do you need to bear in mind when you're doing that?
I think it's just be mindful of the type of home you're buying and the quality of the investment. You probably want to buy something that, doesn't require any renovation. That's going to see out the next 10 or 15 years. So it's just, however long your cycle is for that investment.
And it's not just residential property, of course, also opportunities in commercial property. What are those opportunities at the moment as you see them?
Yeah, we're starting to see a recovery in the retail sector in the eastern states. Certainly the industrial sector is a very strong and stable sector. We're seeing some really, really good opportunities, especially Melbourne and Sydney. We're starting to see some options at around the 5% net yield, which wasn't around a couple of years ago. And then the Queensland has, we're starting to see that market has performed quite well over the last 5 years. So yeah, I'd say industrial, or retail are two sectors that are quite good.
It can be tricky. What do you need to look out for? And I guess particularly having a reliable tenant.
Yeah, well, you want to make sure that tenant fits the market. Fit for purpose is very important. You want to ensure that the business that's renting the premise has been in business for a long time. You want to make sure the lease covenant's quite strong. You want to make sure the lease is also quite strong as well. The lease is only as good as its covenant. So, I think that's it's critical. Because they sort of invest in your site and you invest in their business, and I think it's a different relationship to a residential investment.
Absolutely. And Abdullah, I see you made the point that you say some 90% of property investors never get past their first investment. Why is that? What's the success of the other 10%? What do they get right?
Well, I think it's just, there's five key things, but I think just being able to structure a deal properly. I find that a lot of investors buy an investment without really understanding what their strategy is, and they're buying it in the wrong entity. So I think deal structuring. I think that loan as well. Making sure they're buying the right type of loan structure. I think it's really, really critical. Just having a plan as well. I think people get confused sometimes, with quantity over quality. I'd always say quality is more important than quantity. You can have 30 investments, but that's 30 kitchens and 60 bathrooms and 30 different property managers you have to speak to, or you can have 3 or 4 quality investment properties. So I think strategy is very, very critical.